Thank you very much, and I again want to thank all the witnesses for testifying today and for your testimony that can be submitted in full to the record. You know, I heard from many of you commenting about commodity indexes and the process by which the futures market operate. And I just want to make sure that I'm clear. If I could just ask each of you if you believe that the current price for oil is based only on supply and demand fundamentals, or it's based on other things as well. If you could just give me a yes or no, because I think I understand where each of you are, but I want to try to be a little more succinct about whether based on supply and demand only, or are we seeing other factors?
Well, I'll take the first crack at that. I think the price is completely unmoored from supply-demand. I don't want to discount supply-demand. There is a supply-demand problem, but I think the Vice President of ExxonMobil, who said that his judgment was that the price should be at $50 or $55, another oil executive said somewhere between $35 and $65. The price of oil at the beginning of this millennium was $18 a barrel. Yes, it'd be higher than it is, and we need to do all the efforts, more substitute energy, etc. But we're paying, some believe, as high as 50% premium to the pockets of speculators who are operating in markets that are completely unpoliced. It's equivalent of telling a community the crime rate has been low, we're pulling the police back, they're too expensive, be sure you lock your doors.
I should have said at the beginning that I am going to do a five-minute rounds here, so to try to keep us to a flow of members asking questions, so if you could be succinct. So I was just looking for kind of a yes or no on whether people thought it was the current price was only based on supply and demand or other things were impacting it. Mr. Soros?
There is definitely a speculative bubble that is superimposed on fundamental trends in supply and demand. That is not sort of specific to the present moment, because this is in the nature of markets. There is markets don't just passively reflect fundamentals. What speculation or prevailing biases or misconceptions prevail in the market also affect the so-called fundamentals that markets are supposed to reflect. And occasionally they go into this self-reinforcing bubble mode. And I think this is what we are witnessing today in the oil market, but we have seen it in housing. We see it all the time, basically.
Mr. Rahm, do you have a quick answer to that, or Dr. Cooper? Either of you have a quick answer to that?
The quick answer is no.
It's not just supply and demand.
It isn't. With respect to the fact that if you only look at the coal supply and demand, it would not base it based on those fundamentals.
Dr. Cooper?
I'll be quite precise. $40 for the physical cost of producing crude, the economic cost, $40 for the cartel tax that OPEC and the oil companies put on us, and $40 for speculation. So that two-thirds of the current price is, simply put, baloney.
Okay. Ms. Watson, I know you're probably going to tell me you can't answer, so I'm not even going to ask you about that. So, Mr. Soros, you in your testimony said that circumventing speculative position limits should be banned, provided that that ban can be applied to, all markets.
Yes.
You're basically saying that speculation position, the lack thereof, is causing a great deal of what we're seeing, or could cause a great deal of what we're seeing in this bubble.
Whenever you have outside speculators coming into a market on a very large scale, and particularly coming in on one side of that market, in present time on the buying side, they do distort the otherwise prevailing balance between supply and demand. So the presence of financial speculation has some useful service in providing liquidity, but when it gets too big, it can unbalance the market, and that is why there should be limits on speculative positions, and that those limits should bear some relationship to the size of the market that you're dealing with. The oil market is very big, but some of the agricultural markets, for instance, are very small, and speculation can really play havoc.
Do we, Mr. Greenberger, do we have speculation limits on all U.S. oil traded product?
Absolutely not. We have them on some, but large portions not, because in 2000, this Congress said you can trade outside of regulated exchanges, and because of that Enron loophole, which I believe has not been closed for crude oil, there are no speculation limits in these markets that are unregulated. There's a second charade that an exchange located in Atlanta trading U.S. delivered products is really in the United Kingdom, or Dubai, who's partnered with New York Mercantile.
But that is a U.S. commodity?
Absolutely. They're trading U.S. West Texas Intermediate. 30% of the market is in an exchange that has no spec limits. And by the way, Mr. Soros talks about index speculation. We just discovered in the last 2 weeks that even our regulated markets are treating those banks and hedge funds that are in index positions as commercial interests not subject to speculation. My calculation is right now that about at least 70% of the U.S. crude oil market is driven by speculators and not people with commercial interests. Most of those speculators do not have spec limits. They can buy whatever they want.
Thank you. Senator Dorgan.
Thank you very much. I just want to observe that the Commodity Futures Trading Commission has seen an 8% decrease in its staff over time and an 8,000% increase in trading. Let me say that again, because some people think in this Congress, and have for some while, that regulation is a four-letter word. This important regulatory body has seen an 8,000% increase in commodity trading and at the same time a 12% decrease in their staffing level. That speaks volumes in my judgment. Now, let me ask Mr. Greenberger, tell me succinctly, you told us what's wrong and suggested that, you know, the officialdom here is a dope in terms of the thinking they had closed the loophole. Tell me specifically, if you would, what several steps would you take to address these issues?
I have it in my testimony. I would go back to the status quo ante before the Enron loophole was passed. The status quo ante was, if you're trading energy futures in the United States, they must be traded on a regulated exchange that has speculation limits, margin requirements, etc. The Enron loophole told energy traders, you can go wherever you want, where there's no margin requirements or no regulated margin requirements, no spec limits, no large traders reporting. I've proposed adding 2 words to the Commodity Exchange Act, energy, the words energy in 2 different places, and everybody who trades energy would, as Mr. Soros said, have speculation limits if they're speculating.
Yeah, and I think you alluded to it, but you know and I know that was not a deliberate, the creation of that loophole was not a deliberate policy debated by the Congress. It was, in my judgment, a shameful chapter of something being seen in the midnight hours of a piece of legislation that was a large piece of legislation that was moving, and it caused massive amounts of problems and continues to cause significant problems.
Absolutely, and by the way, I should just add, Alan Greenspan advised against it.
Yeah. Well, even a stop clock is right twice a day, they say. Mr. Greenspan, and let me also make the point. Let me also make the point that while a lot of this speculation, and I mentioned subprime earlier, has been going on, a lot of folks, including Mr. Greenspan at the Fed, sat at their chair without taking the kind of action that should have been taken. But